Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Wednesday morning, middle of the week, we're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, morning folks. At exactly 11:31 IST last night, I checked all possible, sources and social media. What
were you doing awake, Surabhi?
I was just waiting for it. This, almost at the stroke of midnight hour kind of new wave that was about to sweep us.
The time that we start is like early morning.
You don't lose your sleep on all these things. Wake up in the morning
out of
headlines.
curiosity. I like curiosity. But anyway, we have some new posts on social media, but nothing very big or sweeping in terms of more sanctions or tariffs.
Absolutely. It's more of the same in a way, right? Reiterating what's been said before. So I'll just take it from the top in terms of stuff that you need to know. The big one here locally, and I think markets will remain, and specific stock sectors, whatever, will remain a little excited, hopeful, bid on the back of the GST Council meeting, which of course is starting today and runs tomorrow. We'll know what time we get the I think it should be maybe post-market hours tomorrow. Usually these things run late. But this basically a third and the fourth is when when the council meeting is taking place. And we'll get you updates from Delhi. Our reporters are all at the ground. Of course, we've been telling you the broad structure in terms of what the GST GOM is thinking on the lines of rate cuts, rationalization, etc. on the agenda. And a fair bit there. So we'll come to that. US markets saw a bit of a risk off, and S&P was down 0.69. NASDAQ was down about 0.82% as well. And AI-related, AI stocks, the big mega tech stocks, are deflating a little bit at the margin. And is that AI fatigue, or is it concern around incremental benefits of AI? It's an old question. How much money is being pumped into AI and what's coming out in terms of, the spending? Everybody, of course, has gone absolutely berserk, putting hundreds of billions of dollars into the technology and, of course, the allied infrastructure. But markets finally are taking a bit of a breather. So far, it looks like a breather. Now, the VIX was up 9%, 17.5. Gold rose to another record high to, $3,600. So one-way kind of move. Silver, of course, has also been lagging, but doing well recently. The bond market, 10-year, was up 4 basis points. The dollar saw a bit of a move, 0.65 to 98.4. I don't think there was any big reason for the move in the dollar. It started actually during Asia hours, and then it sort of continued into the US session as well. You had two data points, US PMI and ISM manufacturing, which came through. Services is later. That's a more important one. Both were mixed, but kind of sort of slightly weakish. After hours, Google, Alphabet, the stock is up 7%. In after-hours trading, Apple is up 6%. A federal U.S. judge ruled that Google isn't required to sell its Chrome web browser. So, immediate impact on Alphabet, of course, but I think, Apple is also fighting a fair bit of antitrust issues in the U.S. and elsewhere as well. So that also got a bit of a lift. So those are big names, and if this lasts as the U.S. session opens, it'll show up in terms of indices. With regards to President Trump, he was asked whether he's considering lower tariffs on India, and I think he said no. And we'll play the soundbite out in a bit as well. He also said that he's going to ask the Supreme Court to expedite the ruling on tariffs after the lower appeals court ruled the tariffs 7-4 illegal. So, but he's got to, it's the administration's need to now go to the Supreme Court to challenge the appeals court. So that's basically what's happening. There's nothing earth-shattering in that statement. I'll just tie in the levels here. Yesterday was a little disappointing for bulls because you had a nice move higher. The Nifty crossed the 20-day moving average. Actually, we went above the 20-day by about 50-60 points, but then sold off. So at the daily averages is where the market seems to be finding a bit of resistance. Yesterday's high is 24,756. That's the first resistance level. And the low of 24,404 becomes the support, has been the support for a while. For the Nifty Bank, it touched the upper Bollinger Band and then sold off from there. The support here for the Nifty Bank is 53,483 and 52,895, levels we've put out earlier as well. And the resistance becomes yesterday's high, the first at least, which is 54,160. So those are levels. GIFT Nifty will give you a quick sense of how we're likely to start. It's about 50 points lower. How is the F&O setup looking? Nigel has walked across to that setup. Nigel, over to you.
Well, yesterday we did come off from around the 20 DMA on the Nifty, and it was looking quite good till around noon, till around 1 p.m. odd, and then we lost our way. So there could be an element of weekly expiry as well that did play out yesterday, and we crashed into the 20 DMA, and we did pull back from there. If you look at the institutional flows, well, the net institutional numbers were positive, but just keep in mind the FI participation still is not at what we have seen in the recent past, so it's still a little bit lower. Today will be a crucial day because in all probability that FI participation will be back to around 100%. What did they do in the F&O market, though? In yesterday's trading session, there was some shorting that we saw on the Nifty Bank, and that's the easier index to short from a bearish perspective because that continues to underperform, and yesterday was no different. So though on the Nifty we saw some unwinding, but on the Nifty Bank there was some short build-up. And if you just tie in with what the FIs did in yesterday's trading session, they added short positions. 5,000 contracts is what they added. The short positioning has moved to around 92%. Now, those short positions are moving to those extreme levels. And that could be one of the reasons, actually, that India could outperform in this month itself. That's the month of September, when normally global equity markets are a little under the weather. The FI short positioning is reaching those levels where, in fact, we have seen that they reach their extreme level. And because of that, those shorts in the system keep the markets afloat. So we'll see how that goes. Well, you're looking at two strikes, 24,700 call, fair bit of open interest build up, 24,500 put as well. On both those two, there was close to around 20 lakh shares getting added out there. And the premium at around 40 and around 90 rupees odd. Well, moving to the levels then that we're looking at. The Nifty, important mark you wanted to defend on the downside is around 24,400. Crucial mark on the downside, while the resistance level is in line with yesterday's high, in line with around the 20 DMA. Though that's the crucial, both those two are the goalposts that you're looking at on the Nifty. On the Nifty Bank, well, that's been the relative underperformer over the last week or so and the last month as well. Well, important to see that it defends this 200 DMA. That's around 1.5% away from current levels. But that's the line in the sand. You don't want the Nifty Bank to break that mark. Moving to stocks in focus, well, I'm looking at two stocks. We had TBO Tech that came out, with an acquisition. They're acquiring Classic Vacations for around $125 million. It adds close to around 50% to the revenues that they delivered last year. And if you look at the EBITDA number, well, a third of that because margins are relatively lower. It looks accretive at the first look at it. So I'll keep an eye out on this stock. And the second stock that I'm looking at is First Cry, or Brainbees as it's commonly known. The stock has come off drastically. It's nearly half of what it was at its peak. But in yesterday's trading session, you had a fair bit of delivery-based buying in trade in percentage terms as well as in absolute volumes. That's the delivery-based buying that we saw in yesterday's trading session. So I'll keep an eye out on this one as well.
Okay, all right. That's from the F&O space and the F&O desk, all the cues coming in. By the way, across Asia, the biggest headlines are once again political this morning because of this, pomp and show at the military parade that's going on in China. And a lot of statements have come in with Donald Trump saying that China is conspiring against the U.S. And, the Chinese leadership also making some statements at that particular event, that big parade that's ongoing. Markets for the time being are absolutely flat. Not too much after the slide that we saw on Wall Street. Yeah, those are the visuals that I'm talking about. So the North Korean leader, Vladimir Putin, the Chinese leadership, all of them there. It's a grand parade, once in a decade. I think the event is happening after a decade. And obviously, Washington is watching every single bit of it. And that's when the quote came, please give my warmest regards to Vladimir Putin and Kim Jong-un as you conspire against the USA. Anyway, let's quickly move on and now talk about what's pertinent to us. And that is the US president's latest statement on tariffs with respect to India. He said that the two countries got along very well, but also listed out why India was being charged a higher amount of tariff.
We get along with India very well, but India has, you have to understand, for many years it was a one-sided relationship. Only now, since I came along, and because of the power that we have with tariffs, India was charging us tremendous tariffs, about the highest in the world. They were about the highest in the world, number one. And we, therefore, weren't doing much business with India, but they were doing business with us because we weren't charging them. Foolishly, we weren't charging them. So they would send in massive, everything they made, they'd send it in, pour it into our country. Therefore, it wouldn't be made here, which is a negative. But we would not send in anything because they were charging us 100% tariffs. And, I'll give you an example. Harley Davidson couldn't sell into India. There was a 200% tariff on a motorcycle. So what happens? Harley Davidson went to India and built a motorcycle plant. And now they don't have to pay tariffs. Same thing as us.
Okay, well, separately also was asked whether he's considering lower tariffs in India, and there was a one-word answer. He said no. Anyway, U.S. appeals court last week had ruled against Trump's tariffs, called them illegal. The Trump administration has to go to the Supreme Court, and here's Trump himself essentially saying that they're going to do it and expedite a ruling on his tariffs.
Other countries used tariffs on us for years, and we never did. I did a lot during my first term, but then we had COVID and we had to focus on other things. You couldn't be tariffing Italy, Spain, France, as they were dying by the thousands and millions. It's a very important decision. And frankly, if they make the wrong decision, it would be a devastation for our country. We've taken in trillions of dollars. And by the way, all these countries signed agreements. As an example, they're all happy. Everybody's happy. But some whack job put in a lawsuit, and now it's going to the Supreme Court. Now we're going to be asking for early admittance. We're going tomorrow, and we're going to ask for an expedited ruling because, when you look at the stock market's down today, the stock market's down because of that. Because the stock market needs the tariffs. They want the tariffs.
Well, India is in dialogue with the United States for a bilateral trade agreement. That's the word that's coming in from Commerce Minister Piyush Goyal. He also hopes that things get back on track soon to conclude the BTA by fall or by November. Let's listen in to Mr. Goyal himself.
In every sense, one can see an excitement across the world to expand trading and business relations with India. We've had a little bit of a geopolitical issues overtaking trade issues in our negotiations with the United States of America. I do hope things will get back to track soon and we'll conclude a bilateral trade agreement by fall, November or so, as was discussed by our two leaders in February.
Okay, so that was Commerce Minister Piyush Goyal talking about where things stand. He's still, quite hopeful about that bilateral getting done by November or so. Matt Orton, Chief Market Strategist at Raymond James, is with us. Matt, always great to have you on. Thanks so much for joining in. So, the Indian market has started stirring a little bit. It's showing some sign of life, and everyone's really excited about this GST meeting that's kicking off today. You tell us, do you think we're at some sort of or at least close to a turnaround point? And are you looking at any sort of portfolio changes or addition if we indeed get these big GST cuts?
Hi, good morning, Surabhi. It's always great to join. And I think the GST is the right focus. Obviously, there's tariff.
I think we've just lost that line with Matt. We'll try and get him back. But yes, the reminder that the GST meeting kicks off. Remember, it's a two-day meeting. And the big overarching reform, as the proposal carries, is that we will move to largely a two-rate structure, 5% and 18% for goods. Matt, sorry we lost you there, but you were saying that that GST is the right focus. Go on.
It is, because it gets back to the fundamental underpinnings of why India, I think, is an exciting long-term opportunity for investors. India is a primarily consumption-based economy, very similar to the United States. And I think GST, the simplification, is a signal to investors that have been concerned over the long term about the regulatory framework, some rules that don't make sense in India. This is a massive simplification. I think it will do a lot to spur the consumer. And I think it can help get enthusiasm back in the market. And hopefully you'll start to see a tangible uptick to earnings for companies that are exposed to the consumer across the broader market, as opposed to some of the more concentrated gains we've had in India so far this year to some of the winners versus a lot of other companies that have been left behind. So I certainly think it can be very positive. And hopefully it gets foreign investors in particular their attention focused back on things that actually matter longer term to the growth story of India.
Matt, good morning. In the US, are we starting to, are we in the first stages of a bit of a drift lower, a bit of a correction, small, I don't know. I mean, especially the large tech names seem to be deflating a little bit now.
Yeah, Prashant, I think it's a healthy consolidation. Would I be surprised to see a 5 to 10% pullback in what is seasonally the weakest month of the year? Absolutely not. But we are still very much in a secular bull market. And, I continue to think that this market's going to end meaningfully higher than where we are currently on the S&P 500 and for the broader market. Because again, the earnings that are underpinning the AI story are very much real. So people talk about a bubble in artificial intelligence, but I strongly disagree with that notion. You're seeing hundreds of billions of dollars spent in CapEx that continue to increase against all expectations. I would argue you're starting to see a return on investment across a number of these companies, and there's no leverage being used. You can't have a bubble if there's no leverage cycle, and you can't have a bubble if margins remain consistent and among the highest of all companies in the overall market. So I think there's a lot of durability to this trend. And in fact, when I look globally at attractive investment opportunities, I think this pullback is a great opportunity across the world to lean into some of these artificial intelligence-driven trades that are starting to pull back, and maybe you finally get an opportunity or a bite at the apple if you've missed those trades in the past.
All right. Hi, Matt. Good to see you. Matt, what's your view on global equities? The U.S. market has been rock solid. You threw a lot at it. You have Mr. Trump, who says one or the other thing, some uncertainty with regard to the central bank out there as well, and data is mixed. Do you think the U.S. is getting to a stage where it could be peaking out? And what could that mean for an emerging market like India, which hasn't got any flows? Earnings have been a little bit subdued, but we have been big underperformers.
Yeah, Nigel, I think the key word there is earnings. I think the U.S. has outperformed so many other markets consistently because it's really been the only place in the world where you've had consistent earnings that continue to surprise to the upside. So I do think the U.S. continues to perform well. However, when I look at the full global stage, I'm a lot more excited about emerging markets going forward than I am of international developed markets, broadly speaking. Not only because you don't have the economic growth that you do in emerging markets that's lacking in kind of the Europe, Japans of the world, but when you look at EMs, there's an inflection point for earnings. You've seen that in China. That's why Chinese equities have been so strong. Also, because a lot of U.S. policies are actually spurring reinvestments in semiconductors and onshoring in China, which is almost at odds at what the U.S. policy actually is. And I think India, you've seen earnings weakness, but I do think we're getting to an inflection point. And hopefully these GST reforms can be one of the reasons why we're going to start to see earnings move higher. So I would lean into, in the Indian markets, lean into some of this weakness, especially as a long-term investor.
So, Matt, leave us with some names, some stocks. You've liked financials, you've liked names like M&M, Interglobe. But tell us, since you're quite convinced on the GST impact, what would you buy from consumer?
So I'm looking at complements to some of my longer term holdings right now. I've actually reduced ICICI in my portfolio just because I have to respect technicals, I have to respect the market, and I've done incredibly well. So I'm looking a little bit away from financials right now. I'm complementing my travel exposure because, again, I think the consumer can do well under some of these GST reforms and strong economic growth. So complementing Interglobe with companies like Make My Trip, adding to some positioning there, which is a name we've talked about in the past, but also quick commerce. So Eternal has been a winner of mine that I've added to my portfolio this year, but complementing that with a Swiggy, where valuation, I would argue, is very, very fair. Analysts continue to upgrade their estimates for the company, and you're starting to see a reduction in their cash burn, as well as an increase in their gross order volumes, thanks to some of the Max Saver program that they've implemented. So that name to me looks like it's climbing, and I think this is an attractive point to get into. And also Paytm. Again, it benefits from more spending. There's been favorable government reforms, and I think that they can continue to monetize a lot of the users that they brought into their ecosystem. So again, payments is related to the overall consumer that I think is going to continue to do well.
Okay, a little cut some positions in financials, added in consumers, Eternal, Swiggy, Paytm. Thanks very much, Matt. It's always great speaking with you here on CNBC-TV18. Look forward to the next one. Thank you. Well, let me just quickly run you through what's lined up here over the next 2.5 hours. 8:35, Sirma, you'll hear from the manager of Sirma, and they join in to discuss the company's business outlook in light of its latest joint venture for electronics manufacturing. 9 o'clock, Sandeep Agarwal of Subilo Investment Managers is coming on to talk about the IT stocks that he's betting on. Small caps is what Sandeep thinks you should focus on. 9:20, Navneet Munod of HDFC Asset Management will be a market master of the day. He's coming on after a while. 9:35, Rajiv Mantri of Bandhan Bank will be talking to us about whether they are at the end of the pain cycle for Bandhan. Aruna Banerjee of CEAT talks to us at about 9:45 on the company completing the acquisition of Camzo and the possible impact of GST rate cuts and Trump tariffs on the tire business towards the end of the program. It's the economy, Indianomics. Latha in conversation with Dr. Saurabh Garg, Secretary of the Ministry of Statistics and Program Implementation on the first quarter GDP data. That's a big one from the government, which is coming up.
Well, time to take a short break. We go full throttle on stocks on the other side in our special Top 10 segment. We're looking at TCS, Eternal, JSW Cement, DCM Shriram, Aarti Industries, PNC Infra, Waaree Energies, E2E Networks, and TPO Tech. All of them will be reacting to positive news flow, while Indus Stars will be reacting to negative news flow. Take that break, come back, get into further detail on all of these names.
Welcome back. Like we've been telling you, cues across Asia are mixed, not too much of a directional headway, depending on what you're looking at. The last time the Hong Kong market was down, it still is, some green in China. Let's pull up the implied open. Yesterday, the bulls couldn't quite hold on to the positivity, and they gave up a lot of that gain. And this morning, suggesting that it could be a 50-point lower start. So we'll see. Let's quickly move on and talk about the stock list of the morning. Our team is standing by with all of the details, the top 10 stocks that you need to watch out for. Guys, morning to all of you. Let's start with TCS, which has announced a big deal. I think it's in Europe. Rima, morning. Tell us more.
Indeed, it's a large deal win announcement from TCS. The company has signed a €550 million deal with a Scandinavian non-life insurance company called Tryg. This will be spread over 7 years. So €550 million, 7 years. But this is a renewal deal. So it's very hard to quantify what the incremental revenues will be. But in an uncertain environment, when we're looking for positive triggers for IT companies which can boost their growth, this large deal announcement comes as one.
Okay, all right. Thanks a lot for that, Rima. So a bit of a positive, but quantifying it will be a little different. Well, let's get Mangalam in. Mangalam, Eternal going ahead and hiking rates. Tell us more.
Right, so if you open your Zomato app to order something, up until day before yesterday, you would have had to pay 10 rupees as platform fee, and now that has come to 12 rupees as platform fee. But, the important part is that this is a dynamic number. Remember, around the New Year's time, when there is a high demand number, that number increases all the way up to 20 rupees as well. So it's not that the first time they've gone ahead and increased their prices. It also is a dynamic number, so not cast in stone. The good part is that they are foreseeing stronger demand, as a result of which they are able to take that price hike. And that's a positive for not just Zomato, but Swiggy as well. But the important thing to track is that will they go ahead and change any commission model or any take rates from restaurants due to competition coming in from Rapido? Were that to happen, that would be a bigger negative than any incremental positive that the increase in the dynamic platform fee would bring.
Absolutely. And then there is a platform fee, then there is a rain fee, then there is a demand surge fee. So a little tough to know exactly how much the companies are making at which point in time. But thanks for that, Mangalam. Let's get back to Rima now. Rima, Indus Towers is heading to Africa.
It is indeed. So the board has approved the company's foray into the African markets. 3 key countries they will start with: Nigeria, Uganda, and Zambia. So, the street is a bit disappointed because the street was, investors were hoping for dividend payout for the company. They had constituted a committee about 2 quarters back, but the dividend payout has been delayed. Now, when you're now foraying into the African market, this further puts a question mark on when dividend payouts, and if they get delayed, even though there is a risk that the dividend amount gets cut. So it may be a strategic move because Airtel already has presence in Africa, but this puts a question mark on the company's dividend payout ability, which is why CLSA maintains its high conviction outperform rating but cuts the target price to 520.
Okay, all right, Rima, thanks a lot for that. Well, I'm looking at JSW Cement backdated numbers because it's a Q1 numbers. The street is optimistic that in the second half of the year for the entire cement pack, we'll see demand revival, pricing revival, and in turn, profitability revival as well. But these numbers don't look too bad. Top line growth of close to around 80%. Operating profit bumped up by close to around 60%, which meant margins moved from around 14% to around 20%. The reason that they could do those sort of numbers is one, because costs were lower, telling you that there is operating leverage that's playing out. So if you look at the employee costs, other expenditure, or even power and fuel, clearly the focus on cost as well as operating leverage helped them. And that's why the EBITDA per ton popped up to around 975 rupees per ton, with having volume growth of close to around 8%. The net debt, well, perked up a little bit because of the ambitious capex plan that they have, 4,500 crores odd. Remember, the IPO was priced at peak valuations, but expect the stock to open up mildly in the green on these numbers. Going across to Sonal, though, she's here to tell us about DCM Shriram and Aarti Industries. Morning, Sonal.
Good morning, Nigel. Well, an interesting update that has come by because these two companies have entered into an agreement. It's a long-term strategic agreement for supply of chlorine. So basically, DCM Shriram will go ahead and supply that chlorine to Aarti Industries for the new plant in Jagaria in Gujarat. Now, do remember, they already supply 150 tons per day of chlorine to Aarti Industries for existing facilities. Now, they will add around 200 tons per day of chlorine to Aarti Industries once that plant is operational. What we need to understand is what the pricing is here, because chlorine is a very volatile commodity, and that's why we need to understand whether it benefits any of them when prices become very volatile. And when they say long term, what is the tenure of this particular contract? That will help us understand what the impact on the bottom line will be for both these companies.
Thank you very much, Sonal, for that. Vinny is now joining in with more stocks with the news. Vinny, good morning.
Good morning. So yes, keeping an eye out on a few names. PNC Infra, that's the first one. We're expecting the stock to open up in the green after the company has emerged as an L1 bidder. And this is for Lal Bahadur Shastri International Airport in Varanasi. The project value for that is around 297 crores. The next one we'll keep an eye out on is Vari Energies. Couple of news flows here. Board has approved the company's acquisition of 64% stake in Kotsons. That is for 192 crores. Other than that, the board is also going to be has approved the company to acquire 100% in impact grade renewables. This is from its wholly owned subsidiary itself. And one more news that's coming, this is according to media reports where it's suggesting that US company has alleged that Vari's TopCon cells, which are one of these important solar cell technologies that Vari has, that is violating 2 patents. So that is an important issue that comes in. So maybe, open up in the green and then could see a flattish day coming in there. E2E Networks, that's the one we're keeping an eye out on as well. They've received a letter from the Ministry of Electronics and Information Technology, Government of India. And this is for approving allocation of H200 SXM as well as H100 SXM GPUs. And this is for a duration of 360 days. Value for this is approximately 177 crores of this order. So green expected here as well. And TBO Tech, the company signed an agreement to acquire US-based Classic Vacations. This is for a value of around $125 million. So keep an eye out on that one. Positive expected here as well.
Okay, all right, got it. Vinny, thanks very much. So plenty of stocks on the radar. Let's quickly recap our list. The ones that have positive news around them would be TCS, Eternal, JSW Cement, DCM Shriram, Aarti Industries, PNC Infra, Vari Energies, E2E Networks, and TBO Tech. Indus Towers is the only stock on the red side with respect to news flow this morning. Well, with that, let's move on and talk about the latest commodity market action. Manisha is joining in with the latest. Manisha, good morning. What's on your radar?
Thank you for that, Subi. Well, the commodities really seem to have started Asia quite well today. I'll start with gold, and we are trading at a new all-time high, and $35.50 an ounce seems to be taken right now. With this, gold is up 35% for this year. If you look at the dollar index, that one is trading at a 5-week lows, and that clearly has been one of the major supporting factors for many of these commodities. So not just gold, silver is trading at a new 14-year highs. Platinum is now at a new 11-year high. So it's a good going for as far as the precious metals go. But the base metal prices seem to be doing quite well too. Copper prices are trading firm, and this is despite the China weak PMI data. But that seems to be drumming up the stimulus expectations from China. You have zinc prices, which are trading at a 5-week highs. Aluminum doing quite well also in the overnight markets there. And finally, towards the energy markets, the crude oil prices with that 1.5% gain overnight are now trading at a 1-month high. The geopolitical tensions have been on the higher side, but this really has to do with the Ukraine drone attacks now having shut 17% of Russia's refining capacity. That premium seems to be coming in prices.
All right, Manisha, thank you very much for that. So a bit of a bump last night as far as oil is concerned, but largely remains in that range. Brokerage calls of the day. Sud has gone through the entire list. And Sud, good morning. What's on your list?
Good morning, Prashant. So today I have two stocks. First one is Glenmark Pharma. Investec has come out with a note. It has a buy call and target. His given is of 2,510 per share. It says following successful AB licensing, next milestone could be star 0310, and this could trigger a milestone and lend credibility to its specialty pipeline. And also it could trigger another trigger is US facility, that is Monroe clearance and niche approvals that company may expect in the US, and also $700 million milestone from AB in September would strengthen company's balance sheet going forward. Citi has returned on Mahindra & Mahindra Financial Services. It has a buy call and target is 292. It believes that company is making progress in journey to strengthen controls and compliance and also driving risk and collection management via centralization and verticalization. Company is targeting PPOP and AUM of 4 to 4.5%, ROA of 2.1 to 2.2%, and ROE of 15% in the medium term, and also targeting low-teen growth in vehicle financing portfolio, tractors, and refinancing to outpace going forward. Companies expanding non-vehicle financing segments to 25% of AUM by 2030 and more than 40% CAGR in the same period. So these two stocks might be in focus on the back of brokerage notes.
Okay, all right. So thanks very much for that. We do have to take a very quick break, come back on the other side, and we'll connect with Deven Choksi for some fundamental stock ideas. And also, we'll have the management of Sirma SGS join in to talk about the company's business outlook in light of its latest joint venture for electronics manufacturing.
Well, Prime Minister Narendra Modi has said that while oil is black gold, chips are digital diamonds. The PM inaugurated the Semicon India 2025 event and expressed confidence that the world is ready to build semiconductor future in India. My colleague Ashmit Kumar is here with the key highlights of the event to get a better sense of the chip manufacturing ecosystem, the challenges it faces, as well as the key tailwinds.
Semicon India 2025, over 33 countries, over 50 largest companies here, present here. The biggest names, ASML, Lam Research, Applied Materials, all present here. Now the semiconductor market, $600 billion globally, soon to climb to $1 trillion, and India wants to be a major part of it. With that semiconductor aspiration, Prime Minister Modi inaugurated Semicon India 2025.
Oil was black gold, but chips are digital diamonds. इस 1 ट्रिलियन मार्केट शेयर में एक अहम हिस्सा भारत का रहने वाला है। सेमीकंडक्टर के 10 प्रोजेक्ट्स में $18 बिलियन यानी 1.5 लाख करोड़ रुपए से अधिक का इन्वेस्टमेंट हो रहा है।
As a part of India's semiconductor mission phase 1, the government had allocated 76,000 crore rupees. The Prime Minister this morning announced that the next phase 2.0, ISM 2.0 of the support programs is just around the corner, and sources tell us it could be even bigger than 76,000 crores.
आपकी भाषा में कहूं तो डिजाइन तैयार है, मास अलाइंड है, हमारी पॉलिसीज शॉर्ट टर्म सिग्नल नहीं है, ये लॉन्ग टर्म कमिटमेंट्स हैं। आपकी हर जरूरत को हम पूरा करेंगे।
Well, sources tell us that the next phase of government support programs, that's ISM 2.0, will be quick to roll out. We'll see that before the end of the year. The industry will be watching very keenly if their demands are met. In New Delhi, Ashmit Kumar.
Okay, well, that is a recap of day one. The Semicon event continues today and I think tomorrow as well. So it's a big one and we'll continue to get you visuals out of there. Big stalls and it's like the full thing. I just want to say one thing. Let's just put up Keynes, right? Keynes is, from a listed perspective, actually Keynes and CG Power. CG is just about started, it's not actually not started producing, but it's had a soft commissioning and we reported on that. Stock's done well since that happened. And that was, by the way, last Friday. It's up this week some 6-7%. Keynes, of course, has done well as well. So from a listed perspective, listed universe, these are the two companies which are building this OSAT business. It's a new line of business for them. And both of them have got the central government PLI benefit. At some margin, the fear was that once the PLI benefits run out, I mean, was this going to be like a one-time thing? The indication from the Prime Minister seems to be that no, we don't have the details yet. The first sort of allocation was about 7,600 crores. It looks like there's going to be part two as well, perhaps even bigger. As I said, we don't have the details, but indications are that broadly the structure of what will be announced is ready. So I think something to wait and watch out for. But there seems to be continuity. And as the Prime Minister said, it's not short term. The ISM mission is here for the long run. Surabhi.
Okay, and speaking of semiconductors and manufacturing in India and electronics in India, good time to bring in the company that's on our focus radar as of now. And I'm talking about Syrma SGS. Now, Syrma SGS came out with an announcement. They are going to be getting into a strategic joint venture with Elemaster. This is a company based out of Italy to strengthen the high reliability electronics manufacturing in India. Sandeep Tandon, Executive Chairman at Syrma SGS, is with us. And Sandeep, hi, great to have you in. I just want to lay out three key points that our viewers, your investors as well, would perhaps want more clarity on. Number one, we want to understand the rationale behind this joint venture and what it really brings to the table. And of course, we want to know your outlook on exports because so much is shifting across different geographies. And of course, an overall picture on the order book right now and how the rest of the year is looking like. So, Sandeep, let me open up with the JV. Very interesting. It's an Italian company, and I think you're going to set up the unit in somewhere in Bangalore, if I'm not mistaken.
Absolutely.
So let's start right there. What are you going to be making? Because the announcement said that it'll be products for clients like the railways, for a lot of companies in the manufacturing arena. So what are you going to make? What's the strategy and how much money are you going to put to work?
Okay, thank you so much for having me on. Elemaster is a large player out of Europe. They're headquartered in Italy, but they have plants all across Europe, also North America and China. They serve mainly mobility, the railway sector, and European defense companies and European medical. So very centered around European customers that are industrial, medical, and railway focused. Now they wanted a lower cost manufacturing partner that could be offshore, and they chose India as a location for their further expansion. And they see us as a very good partner to run that operation and bring their customers a solution for the India needs, because Indian market for railways is also growing quite substantially. So their customers wanted an India footprint.
Got it.
So that is the main reason we are focused on.
Got it. So they needed better, more efficient, low-cost, high-quality manufacturing, and that's where the partnership came in. Now let's talk about the monetary nature of this partnership. What is the structure of this, the equity structure of this JV? How much money will you be investing from your side? And then, what is the ROI? In how much time will your lines be up and running? When do the first shipments begin?
So the total investment is 55 crores to start out. The plant is in Bangalore because we believe in, starting small and growing big. So the 55 crores is the initial setup, but this is 55 crore alone should give us about 7 times turn in the revenue. The plant will be in Bangalore, and it is, and a 60-40 split. So Elemaster will be investing about 40% and we'll be doing about 60%.
All right. Hi, Sandeep. Good morning. Congratulations on this JV. Give us a few more details. What margins will this JV enjoy. 400 crores could be peak revenues. And by when do you get there? Will this reflect in FY 27, 28?
This would reflect in FY 28 fully. So it's starting out, I think, FY 27, we should see about half of that quite easily. But we have already been working with them, so it won't be a slow start. It will be quite quickly starting out. The margins, I mean, India business is always stressful. So the margins on the India side will be always under pressure, but we expect operating margins still in double-digit range. And, with this, we also get to serve some export customers and also other services that we can add to the customer. So we are quite sure that should be double-digit range margin.
All right, double-digit margin. And just to clear the air on that, the JV will be primarily to focus on Indian clients, or as you said, it gives you all that optionality, right? You can also serve European clients. They're European clients. So how would that work going ahead? And ultimately, say you could have a 5-year horizon. How big do you see this JV becoming? Because the potential, going by what you're saying, is tremendous.
Yeah, it's tremendous. So I don't want to, color anything beyond what is right in front of my eyes. But if you see, Helimaster itself is about 450 million euros. So it's a sizable company. And they serve a lot of these large customers. So as the customers' needs keep changing, I mean, it's a very dynamic world, right? So we don't know what comes about, but we could serve those customers in India and their global needs. So Helimaster is excellent in serving them for the, prototype build, and for lower cost alternatives, we could be the partner also. So I don't want to, confirm anything, but we definitely see what we have in face is quite substantial.
Sandeep, you said that the investment is 55 and it could be 7 times, the revenue turn. So I'm just trying to figure out scale up. Let's say if you're up and running by FY 27, as you said, because it'll happen quickly. So what could the revenue be in year 1, year 2? Are we talking, to begin with, is it going to be...
Like I said, FY 27, we could hit about 200 crores in revenue.
FY 27.
It's not so much the capacity, right? It is also qualifications. These are high reliability electronics. So approvals itself take 6 to 9 months sometimes.
Okay. All right. Very quickly, since we have you, Sandeep, what's the status of the Bayer PCB project? Have you scouted for the land? Has the company applied for ECMS?
We've identified the land, and we have already been approved by the state of Andhra Pradesh. Now we're waiting for the central approval. That's part of the component scheme that should be coming out. Approval should be happening end of this month. We were one of the first to apply, so
correct.
We should get that quite quickly.
So you'll have applied for the ECMS scheme. Yes. Is that correct?
Correct.
All right. And what's the total capex for this Bayer PCB project that you'll have laid out, say, in the next 2 to 3 years?
So 2 to 3 years, it would be about 300 crores.
300 crores. Always good speaking to you.
Just one thing. One last question. We were just talking before you came on. We were talking about the Semicon event which is happening, and maybe there's another scheme which the government announces. The first one, of course, was fully utilized. So is that something you would be interested in? I don't know if you were interested the first time around.
So always it's backward integration, forward integration are critical in this opportunity. But we always believe in working with the right partner, right? I don't want to put up a plant just because I have a subsidy. I want to make sure I have capacity filled up before we put that up. So we are looking for the partner for this also. We have a lot of conversations on.
Okay, for a OSAT basically.
Correct.
I see. So once you have it, then you will apply. But you may have to do it simultaneously. If but that's very much on the agenda.
Yes, definitely.
Okay, all right. And any numbers there in terms of how much? Are you close to getting a partner on? Are you?
It's not. It's not confirmed yet, so I can't tell you anything about that.
Okay, fair enough. We'll leave it there. Thank you very much for joining us. Good speaking with you. So that is Syrma, with, of course, what they've done with Helimaster, but maybe a little bit about that OSAT business where Keynes is there. Syrma, very much interested. But we'll see if they find a partner, as he said. Let's talk about markets. And Devin Chokshi is with us to help us with that. Devin, good morning. Great to have you with us here. Thanks very much. So GST meeting. Is it, how are you thinking about this, Devin? Will it keep stocks bid, especially in areas like autos, etc.? Or you think for most areas it's going to be a little bit of, buy the rumor and sell the news?
Yeah, Prashant, good morning. Well, I think the market has already started factoring the GST-related impact, particularly on the high GST items, high GST rate items. Factoring that, I think this is coming down, which is in a way good because I think the market is definitely forward-looking on this subject. Auto ancillary, which you mentioned, I think definitely remains the best part of this entire reduction program, which will happen. In my viewpoint, I think the sluggish demand scenario, particularly in the passenger vehicle segment, could possibly see the lift if we see the rates coming down. And I think those rates which are on the premium products, if it is coming down, then it is even better. We believe that I think market has partly factored this particular news and momentum, which might quite possible that after the announcement, I think the market price would start correcting for some of the stocks. But on the whole, if you look at the earning opportunity that one is getting out of the business, I think these companies are likely to show relatively steadier to better performance, not only in the current financial year where I think the amount of demand scenario is emerging, but also in subsequent period in next 3 to 5 years. So one remains cautiously optimistic about the possibilities going forward with the rate reduction happening. It will be only a boost coming in some of these companies.
Okay. So all the consumer stocks, auto stocks, all of them on our radar. Good morning, Devin. Good to have you in. You know, every time I order something on one of these quick commerce apps, I realize that the fee ends up inching a little higher and higher. Now we have confirmation, right? Zomato has increased the platform fee from 10 rupees to 12 rupees. Swiggy is already, I think, at a higher point. And the stocks have been doing extremely well. What's your view on both Swiggy, Zomato? Do you like either or both or neither?
Yeah, Sylvie, good morning. Well, I think I believe in consuming more than buying for investment in stock at this point of time. Largely more, but because of the fact that the valuation-wise, I think these companies have already reached to a scale. And certainly, I think if they keep on increasing the fees by 10-20% every now and then, it means that the profit performance would probably happen faster for these companies, which they have not seen in the previous years, I think, since they have listed also. In my viewpoint, I think that is justified. But at the same time, I think everything is in price today. We are not getting this business cheap. And at the same time, I think we are seeing that quick commerce, Reliance is entering into quick commerce. I believe that I think this is one company which one will have to be mindful because I think wherever they have operated, in whichever space they have operated, they have reached number one by disrupting the markets. And I think that's where probably the larger amount of threat would be to the existing players. So we'll have to wait and see, particularly more because the valuations are expensive. I think one would like to wait and see.
Okay, all right. Devin, I'm not sure whether you've seen this. You know, the TBO Tech, they've gone ahead and they've done this acquisition for around $125 million. And just back of the envelope calculation suggests that their revenues could go up by approximately 50% in comparison to the base year and EBITDA by around a third. Valuations as well look pretty okay. Any view on this? The acquired entity, margins are around 10%. They do around 17%. But otherwise, in the entire scheme of things, it looks like it's accretive. Any view?
No, Nigel, I think I haven't seen this thing in detail, so could probably comment it a later date.
Okay, all right. What about JSW Cement? They came out their numbers. The numbers are backdated because, you know, they're still giving numbers for Q1. But we know that the group actually has created wealth. If you look at the steel assets, you know, even the power assets as well. So the parentage is good. The valuations are expensive. But they have said that in the time to come, they'll scale up profitability as well as size. Your view at around $150?
Yeah, I think we are convinced about the scenario per se in the commodity in cement. That is something which we understand well. My take is that I think whenever the companies put in more money in the expansion of capacity or even for that matter inorganic growth, I believe that I think the investors don't earn enough in those kind of situations. Maybe in a temporary momentum, you might see the price rise in the stock. But ultimately, I think till the time they absorb the entire capex program, the investors don't make enough amount of money. So in such situation, when the valuations remain expensive compared to peers, I think one will have to be a little bit more watchful at this point of time. I believe that I think there is a scope for upside of 10 to 20% in most of the cement stocks. And maybe I think if the price firms up a little bit more, the tailwind could be a little bit more as well. But around 20% kind of an upside can't be ruled out in most of the cement stocks as we see it today.
Okay. Devin, Thank you very much for joining us. A quick conversation. Appreciate you joining us here on the channel as always. We'll take a quick commercial break here. We're going to come back, focus on the big movers on Dalal Street yesterday. Hormuz is going to join us for that. Stay tuned. Coming up. Welcome back. Hormuz is now joining us as promised with the big movers yesterday and, of course, what the numbers show us in terms of the volumes, delivery statistics, etc. Hormuz, over to you.
Morning, Prashant. And sugar, of course, was the highlight of yesterday's session. And almost all those stocks ending with double-digit gains. I've picked out 3 of them, being Sri Renuka, Dwarikesh and Dhampur. And all of them had their highest trading volumes in a year or more than a year in yesterday's trading session. And take a look at those volumes. Sri Renuka having almost 17.25 crore shares changing hands. The 20-day average is just over 20 lakh. Same is for Dwarikesh, around 66 lakh shares for traded yesterday compared to a 20-day average of just around 3.5 lakh. And same is the case for Dhampur. Take a look at Dhampur here. 41 lakh shares traded. The 20-day average is less than a lakh. And when it comes to the delivery as well, the delivery volumes are too significantly higher for Sri Renuka as well. Almost 1.5 crore shares marked for delivery yesterday compared to a 20-day average of 9 lakh. Dwarikesh and Dhampur as well, almost 4.5 lakh shares for delivery for Dhampur, and the 20-day average for delivery is less than 50,000 shares. So it shows the kind of moves that sugar stocks had yesterday. A stock that made a new high in yesterday's session was MRF, and now one share of MRF costs more than 1.5 lakh. And that 6.25% surge that you saw in yesterday's trading session was the biggest single-day gain that the stock saw since May of 2022. Of course, a closely held stock, not very liquid, but even then, the stock is up 10% in the last 2 sessions. Yesterday's session saw 33,000 shares change hands in a single day, and 20-day average is 6,500. And for delivery as well, over 11,000 shares marked for delivery. The 20-day average is just 2,500 shares. The other highlight of yesterday was MobiKwik. The stock ending in a 20% upper circuit after ADIA's exit. The stock closing above its IPO price, and more than 6.5 crore shares changing hands. 20-day average of just 22 lakh, and almost 70 lakh shares marked for delivery. A 20-day average of just 4.5 lakh shares for MobiKwik.
Okay, all right. Thanks a lot for that, Hormuz. Well, let's go across to Rima, because Indus Stars has forayed into Africa after it got its board approval. Rima, the street was looking forward to a dividend, but they have gone the other way. Tell us more.
Thanks so much for that. So, Indus Stars board has approved international expansion. They will be entering into the African market, and they will start off with 3 key markets: Nigeria, Uganda and Zambia. Investors are a worried lot, because this expansion would mean that the dividend payout that they were anticipating perhaps gets delayed further or even gets cut. So CLSA maintains their high conviction outperform rating on Indus Stars, but cuts the target price to 520. They say, we had expected the management to focus on improving the capital structure by paying out high dividends. While the board is committed to reinstatement of distribution, but there is an unjustified delay in dividends. But on the other hand, Citi continues to remain bullish. Their target price is at 460, which compares with 330 of where the stock closed yesterday. So significant upside. They believe the concerns are overdone, whether it's to do with VI sustainability or the slowing rollout of, or even the delayed payments. They believe all these concerns are overdone. Current valuations remain favorable, and they say their bear case scenario is 300 rupees on Indus Stars, and the stock is not very far, 330 from it. So therefore, from here on, downside, according to Citi, remains limited, in any relief, whether it's on the dividend front or VI, could actually act as an upside trigger for the stock.
All right. Thank you very much, Rima, for that. That's an important story. I mean, the dividend at Indus Tower, long in the coming, and perhaps now a little bit more in terms of delayed. But we'll get you some opinion on this as well. Take a quick commercial break here. We're going to come back with a pre-open. And of course, some trading ideas. Sudarshan Sukhani and Mitesh will be with us to help us with that. Stay tuned.
All right, Pre-open rates will be flashing for you on the screen. Boy, oh boy, we would have loved that. The Nifty pre-open suggesting 600 points up. Woohoo! Hopefully someday. But for the time being, let's get in our technical guests. We have Sudarshan Sukarni and Mitesh Thakur who joins us. Good morning, gentlemen. Good to see you in as always. Well, that pre-open rate is still settling down. There'd be a day when we could see that sort of a gap up, but not today. How do you approach the index? Mitesh, you go first. Your view on the Nifty, yesterday things look good, and then that expiry-related factor played out, and you don't know what Trump is going to announce next, and that's why the 24,700 mark got rejected. But for today, how would you approach trade?
Morning, I think both the indices, especially the Nifty, to me appears to be getting into a range. You will get support around 24,400, 350. And then on the upside, you have 24,800 as the midpoint of the range and 25,100, 150 as the upper end of the range. So I think the Nifty will consolidate. There is mild weakness in the banking and the financial names, while FMCG as a sector had a good breakout. So that's where the positive signs are. But broadly, it looks like a market where you would want to be more of stock-specific approach is recommended. And I think, that's the way I think it will be for next 1 to 2 weeks.
Okay, so stick to individual stocks. Got it, Mitesh. Coming right back to you for those individual stocks. But let's welcome in Sudarshan as well. Sudarshan, morning. What's your view? Any index trades?
Yeah, good morning. Yes, yesterday the idea was to buy on a dip. We have got that dip in the afternoon and today morning, I hope. So I would be a buyer in the Nifty. Our support levels are somewhere around 24,400. So assuming that the entry is where the SGX, the GIFT Nifty is suggesting, we have a very decent and tight stop loss and the possibility of an up move. So the risk reward ratio becomes favorable. So the trade is wait patiently for the markets to sort of consolidate, cool down in the first few minutes, go long, keep a stop under 24,400.
Okay. All right. Now let's talk about individual stocks. Mitesh, so tell us what's on your list.
Morning, Sulbi. As I said, the FMCG index is the one where a lot of action is happening. So I've got two FMCG stocks on the recommendation list. Dabur is the first one, managed to get past the earlier highs. So buy with a stop below 535, 536, and a target of 565 can be looked at. Britannia also made a fresh swing high. So buy here with a stop just below 58.40 for targets of around 6,000. A buy on IGL, which had a good gap breakout. So if you get it on a mild decline, around 215, 215.5. Buy with a stop below 210 for targets of 228. And ICICI Bank is on the sell side on a mild pullback of around 5-6 points, around 1,400. Try to take short positions with a stop just above 1416 and a target of 1360.
Okay. All right. Got it. And Sudarshan, what about you? Which stocks today?
Well, I also have two FMCG stocks. Fortunately, they are different names. United Spirits is a buy with a stop under 1,305. Tata Consumers is a buy with a stop under 1,083. Now, for the other two stocks, Hudco is a buy with a stop under 211. And Petronet is a buying opportunity with a stop under 272. It's an all-buy list. And as I've already said, look to buy the Nifty.
Okay. All right, gentlemen, thanks very much. We'll come back to you a little closer to market opening. But for the time being, we're putting the spotlight on IT. Two things. Off late, so far this week, we've actually got some positive notes, some positive murmurs from various brokerages, including CLSA, turning tactically at least a little less negative on the sector. And then, of course, this morning's news is the big one. TCS has signed a big deal. It's 550 million euros. This is the digital transformation deal that the company has signed for 7 years with a Scandinavian insurance company. We've got Sandeep Agarwal, fund manager at Solio Investment Managers. Sandeep, hi, great to have you on, and perspective is, always very, very welcome from you. So, okay, let's start with this. A deal of this size, now these are long deals, right? So I don't know if it really signals anything. Should we read too much into it? I don't know if it's AI or, of what in nature. But really, go back to the same question, large cap IT services. Is there any light? In between, by the way, Infosys set up an AI subsidiary as well. So you tell us, since our last conversation, do you see any positive indicators of change?
Hi, good morning, and thanks for having me on the show. So I will not, comment on any specific stock, but let me put it this way that, the large cap or the IT sector in general, We need to see very clearly in three pockets. Now, I think it will be very difficult for large cap names because of the penetration which is there in the developed market to give very good growth rate. And what I mean by very good growth rate is either a high single digit or a low double digit growth. I don't think those trends will be anytime soon. It will be tough to do that. We will see this sector more like 5-6% growth. The mid cap, which have seen, post COVID a 25-22% kind of growth, they will come down to low double-digit growth for next 4-5 years. And probably the small names, small companies which are very few in the listed name, they can really do higher growth because, the sizes of contracts have consistently been falling last 10 years. So in earlier disruptions, large caps were beneficiary. In 2022 COVID disruption, the mid caps were beneficiary. And I think the AI part, I think the small caps will be the beneficiary. And that is the way we should look. And the good part is that, the multiples are reversed. The small cap multiples are lower, the mid cap are the highest, and the large caps are in between. So I think this sector for the large cap is now more or less ex-growth sector. It is not a growth sector.
Okay, so yeah, and that's been your view for many months now. So nothing changes really with some of these announcements that we've got off late, including today's deal that TCS has signed. The other aspect is just how investors, yourselves including, how would you look at just valuations right now, even if it is large cap IT, with the overall market context in mind. Now, CLSA's view was that if there is a rate cut in the US, which is the base case, then maybe it'll be positive for Indian IT. Discretionary spends might go up, and therefore they're tactically, like I said, they're less negative. Is there a reason to be tactically less negative on IT given its underperformance?
Yes, so this sector also has some positives. They do consistent buyback. They do give a lot of dividend. And as rightly mentioned, that when there is such a long duration of underperformance and such a sharp underperformance, then there is a chance of some revival. Secondly, the way people buy market funds and the ETFs and replicate index and all. In those cases, generally you buy everything. So this sector will also be a beneficiary of that. So in my view, while valuations have come down, fundamentally the PEG ratios have not come down. But at the same time, yes, the underperformance means that, the downsides may be limited. And I firmly believe that this sector will be replacing some portion of FMCG as defensive going forward in next 4-5 years, because at similar growth rate, if you are getting some other sector at half the multiple, then probably, that is the way people will also look at it. So I think that given the underperformance and the correction, it is possible that, tactically this sector can move up.
But I mean, to create wealth here, Sandeep, it's small caps, right? Small cap IT names.
Yes.
Where the focus should be.
Yes, because you have to find out those companies where, there is no middle layer, because middle layer is the one which is right now facing maximum challenge. And in the small companies, what happens is that the number of total employees itself is less. And for them to pivot to, changing technology will be much easier. I'm saying that even the large names like, Infosys, any one of them would be doing like 20-30x more work on AI and everything. But in overall scheme of the size, the percentage of those changes will be so limited, and it will take so much time to, make a meaningful change, that the first one to reflect those impact of those changes will be the smaller size ones. So I will repeat that, 2022 was something for the mid cap. You will see probably next 2-3 years, same thing happening in the very small companies, it will be very easy for them to do $50,000 or $100,000 projects in AI and machine learning. And so it opens up a lot of clients to them. So that is the big change which is happening.
Sandeep, there's no question about, a few things have happened, right? Last 3-4 months. There was that MIT paper which raised doubts about the productivity. There was that Apple no reasoning paper. There was, of course, Altman's bubble comments and a few other things, all in the matter of last 1.5 odd months. It just sort of, how should one look at this? Just tactical kind of things as in the long journey, which is AI and what it'll do and how it'll shape things?
No, so, I think AI will be very disruptive, and it is already disruptive, because AI basically means that your efforts will go down. But within AI, if you see the big change which is happening within AI, also now people are looking for more and more improved versions of it, because right now it is churning too much of data, which consumes lot of power, which needs lot of computation power. So GPU sales are at like going up substantially. So I think better versions, what will happen is that hardware cost will start coming down, the GPU sales will start coming down, and the power consumptions and other aspects will also come down. So it will become more and more efficient going forward. Good part for us is that, finally this thing will also become a process, will get into process, and that is where we have expertise. So our large cap IT companies after maybe 2 years will also start benefiting out of it. Now, how much will be that benefit? We have to see, because at the same time, efforts will start going down. So net, what will be the incremental growth rate? Very tough to say, but efforts will go down and realizations will go up, and we will also get work once this things become processed.
Sandeep, just very quickly, I wonder if you've looked at a company called E2E Networks. It's just got this order from Meti. It'll be supplying GPUs, I think. Now, I don't know how how deeply entrenched they are in the AI chain or in the GPU, process, which part of it. But it's not a stock advice or idea. But in case you've studied this company or any other small cap, mid cap company that's actually making tangible progress on AI, can you share anything for us with us quickly?
So, I have studied the company, but I won't comment on that. But I can tell you this, that, there are a lot of companies right now in India who are doing phenomenal work in AI. It is that, they are at very nascent stage, so it is not reflecting. And they are doing a lot of collaboration also, and a lot of things are happening. And I am very positive that in next 3-4 years, you will see a lot of companies coming out of Pune, Hyderabad, Chennai, Bangalore, who will be deeply entrenched in this space, and they will be doing parts of it. And I honestly believe that, the GPU is something which has happened. Now we have to look forward. So I think, GPU sales, in my view, what NVIDIA is doing right now, the kind of profits they are making, you will see strong competition coming in there, because finally it is something which people, there are many people who are also working on it, and they are also at advanced stage. But I think the bigger thing will be to do in LLM, and what changes you can do there, what kind of APIs you can build around the agentic, and we are very, very strong in that space. So you will see a lot of companies from India coming in.
Sure.
All right. L&T has 20%
in E2E Networks, correct?
So that happened a couple of months back. Sandeep, thanks very much. Good speaking with you. Appreciate it very much here. Just a quick recap of the stocks which should be in focus and stuff that we put out. Let's move this along, please. So TCS is the first one, which is up on your screen. $550 million deal. There is Eternal. There's a platform fee hike, which is up about 1%. Indus Towers, of course, I guess dividend delayed even more. Stocks down 1.5% as it opens up. Was down 3% yesterday. JSW Cement on the back of earnings, and just looking at how things have settled in the pre-open. DCM Shriram, Aarti Industries will come up. There's PNC Infrastructure, E2E Networks, which we were just discussing earlier. There's Vari Energies, maybe slightly negative. TBO Tech, of course, is related to the acquisition. Stocks opening up about 12.5% is a recent listing which came through. Sudarshan is with us with what says 910 call. Sudarshan, what do you have?
That's United Spirits, buy with a stop under 1305.
Okay, all right. Mitesh, what about you?
I choose a buy on Dabur for targets of 565.
All right, Sudarshan and Mitesh, thanks very much. 2 minutes to market open. Just want to quickly run through what Investec has to say about Glenmark as well. Ekta is standing by with that. Ekta, over to you.
Well, they have a buy with a target price of 2,510 following the successful AbbVie licensing deal. The next milestone, according to them, could be star 0310. This could trigger a milestone and lend credibility to its specialty pipeline, according to Investec. The triggers also include the U.S. facility Monroe clearance as well as niche approvals in the U.S. The $700 million milestone from AbbVie in September would strengthen the balance sheet, according to Investec on Glenmark.
All right, Ekta, thank you very much for that. Just running into market opening, less than a minute to go, and we will see how trades and rates start to come up. As always, we'll look at the Nifty, the benchmark indices, and we'll go into individual stocks, etc. The big one is TBO Tech. I think we just sort of flashed the rate 12.5% higher. Recent listing, and it's really gone up substantially on the back of the acquisition. Just counting down to the market open should be, slightly higher, flattish, but not very definitive in that sense. Yesterday, of course, market sold off from daily averages. 24,600 is where the Nifty is at. It's flat, absolutely flat. Nifty Bank, I think, is also flattish, 0.1% or change. Sensex is flattish. Small cap index and mid cap index maybe a little better, I think so. So 0.4, 0.5% odd on those indices right now. So not very much directionally right out of the gates. What do we have in terms of the market heat map? How many up and down on the Nifty at least? So it is kind of evenly split, more up though. And Eternal is one of the names we highlighted with news. It's on one end, and on the other end there is Infosys, which is starting. But these are just very, very first rates inside the first 1 minute in terms of market open. 24,600 on the Nifty. Surbhi.
Okay, so it's all about food delivery and quick commerce. Eternal, 1.5% up, and Swiggy is moving up as well, slightly higher, 2%. Remember, Swiggy is anyway charging, I think, 12 rupees as platform fee. Eternal has caught up, and it's now at 12 rupees as well. M&M fell quite a bit yesterday. There were worries about what happens with the GST on EVs, etc. But the stock's recovering this morning, 2% higher. There's some buying in metal names, Tata Steel, Hindalco, both looking up. IndusInd Bank is slightly higher. TCS is reacting positively to that deal announcement, the 550 million deal that they've done in Europe. So that stock's up. SBI has started off at least with a 0.5% gain, and then it really fizzles out beyond that. On the downside, Infosys is the counter. ICICI Bank is the red counter on the lower side. So that's not letting the Nifty make any tangible move, even Lever for that matter. L&T, you have enough big boys who are choosing the red side of the screen this morning. So the net result is not much of a move at all, just about 18 points up on the index. Nigel.
Well, that's right. Some of the big movers that we're seeing this morning, one is UPL. They've undertaken internal restructuring, transferring its wholly owned subsidiary, Post-Harvest Solutions, that's Deco, business to Adventa, at an enterprise value of around $500 million. The street likes that, could potentially be laying the groundwork for some kind of monetization. So that's the way the street looks at it, and that's why that stock is up close to 2%. The reason that TBO Tech is running away is because this acquisition helps them to foray into the North America market. It adds close to around 50% on the base revenues of last year, and on the EBITDA front, close to around a third. And the valuations as well that they've acquired this are pretty much attractive. So that's why that stock is running away. That's up close to 10%. On the flip side, Indus Towers, foraying into a new market, she doesn't like that. They want to see dividend. And that's why that one's down close to around 5% as we speak. Another loser is Kirloskar Oil. I'm not sure what's gone on there. But that stock is a notable loser on the downside. And you have Vimta as well. Just pull up that stock. Yesterday it was flying away. It was up close to 20%. Today as well, that stock is up and about in today's trading session, up another 6%. One of the top volume movers today. Add to the list, Ola Electric took a bit of a break yesterday. Today it's back to its winning base. So that stock as well, up 2.5%. Prashant.
Okay, I think, a lot's happening in terms of the opening rates. Let's straight away welcome in Navneet Munot, who's the Managing Director and CEO at HDFC Asset Management. He's with us here in our studios. Navneet, great to have you with us here. Thanks very much.
Entirely my pleasure.
Long time. What took you so long?
Really long.
First of all, greetings on the Ganpati Utsav.
Same to you.
We are entering the festival economy, wedding economy, and a winter economy. And I will get the GST gift during that time. So hopefully this will turn out to be a very auspicious time for the economy also.
Oh, absolutely. And hopefully somewhere in there, these tariffs also get negotiated lower. I mean, sooner rather than later.
More than the tariffs, I think the world is moving from a unipolar world to a multipolar world. And everybody in the world is recognizing. You pick up global media and you can see the front pages pictures of our Prime Minister with the global leaders. And India clearly as the center of the world in which direction it is moving. So mother of civilization, the largest democracy and the future of planet is clearly going to drive and play a very, very big role in the world that we are going to witness in this century.
That's a super charged up, and that's the way to be, right? I mean, you got to back yourself.
No, clearly, I think last few days we have clearly seen, I think the institutional degradation that has happened in US and the way India has responded, I think 1.4 billion people are very proud of that.
It's come to a pass, Navneet, that even US media, which typically would be completely against, would back the Republican administration, Trump administration. I mean, most of it is now saying, well, this has gone too far. I mean, you're antagonizing one of your oldest and strongest allies in the region in terms of India. So I think there is recognition in the US as well, but I think it's just one man who has to...
I think they forgot that Peter Parker in Spider-Man, with great power comes great responsibility. I think if you are a great power, if you are a reserve currency of the world, if the whole world is trusting you with their money, it comes with great amount of responsibility. I say this to entrepreneurs also. When you raise public money, it comes with great responsibility. You are a trustee. I think same is true for United States as a country.
But Navneet, I completely take your points on the global stage. I think that picture, the all smiles picture with Mr. Xi, Mr. Putin, the handshakes, I think Washington took very serious note of it.
The Japan has not been as many pictures, but if you ask me, I think they have the technology and they have capital. India has talent and the trust capital. I think together it could be a defining relationship of this century.
Absolutely, absolutely. You know, but now from global politics and geopolitics, coming down to the here and now, and I want to get your thoughts on the way the market has reacted to a series of events in the last three, four weeks, I think. And good things have been announced. I mean, that GDP number, 7.8%, GST cuts. But the reaction has been, I mean, euphoria is a very big word, but even otherwise, I mean, there's a sense of disbelief and despondency and that, you know, it's still ambling along. Best case is, chalo, market gir to nahi raha hai. What have you made of the way the market is reacting to what could be big changes? You yourself started by saying that on GST.
But don't you think market has been having a very good belief? There has always been this saying, and this is like Teacher's Day 2 days later, that whenever your driver gives you a tip, that's a time to sell the market. Now I tell people my driver has been doing the sip. He's not giving the tip. And he's the one I look up to now. And the whole world should look up to. I think he's been right last couple of years, just kind of maintaining the faith in the market and not paying too much of attention to the noise from rest of the world.
So from the tip to the sip, that's the transition of the Indian market.
Navneet is dropping all bombs today. I mean, that's a nice one. I've never heard it before.
I've always said that this nation, this is underestimated. And Prashant, we discussed when I think SIPs crossed 4,000 crores, that I think this nation is transforming from a nation of savers to nation of investors.
Right.
And that 4,000 crore a month has become 28,000 crores a month. And we have seen COVID, we have seen Russia-Ukraine war, we have seen Israel and Middle East, we have seen like oil prices going up, coming down. We have seen many cycles, rates going down, going up, now coming down again. But I think this is a very, very structural transition.
I just want to ask you on the flows part, Navneet, just one thing, right? FIs have sold about $14 billion worth of stock this year. Local money is about, what, $55 billion?
Yeah.
Which is coming, right? 14 versus 55.
So since 2021, mutual funds have invested $165 billion.
But just this year, I just want to say, what is, I've always wondered, $55 billion, it's, you know...
Of local money.
Of local money versus $14 billion of selling. And the market...
is still flat. But that's also paper, right?
So what is the, what's the equilibrium where...
I think the two things. We are seeing the flows from the domestic investors. On other side, you are seeing two things. One is that foreigners have sold. And number two, you have seen the primary supply. So there's a supply from private equity and venture capital looking for exits. You have some of the promoters diluting. You have companies raising capital, which is not bad. I mean, how a trade will happen, Prashant. Ek koi buy kar raha hai, somebody has to sell that. And that's where the supply is coming.
Sometimes
next several years, when people tell me with this liquidity, market can go to any level, it won't happen. There is so much of supply waiting to come to the market. So at every rise, with every incremental liquidity, you will see the supply.
Which is also a good thing, because otherwise you can have a blowout top.
It's a great thing. The universe is expanding, and Indian markets, I mean, we are already fourth largest in the world. In fact, that would be critical. It is not only the price appreciation, but the new paper that will keep coming. And the new businesses. You have to meet the younger entrepreneurs to...
Urban Company, I mean, they filed their prospectus just now. I mean, absolutely new business.
And,
so many of them.
So much. So we don't track it, but so much money is going into newer unlisted entities.
Absolutely.
I mean, old public market investors have all become venture capital investors, because there is, I mean, the breadth of the companies which are out there. So absolutely take your point. Nigel.
Navneet, but good to have you in the studio, Navneet. And, you know, I'm giving your driver company as well. I'm keeping the sips going. And, you know, and my staff as well at home, you know, advise them just keep it going. And now they're saying, sir, should be. So that's what we're doing. That's all great. You know, that liquidity, the entire evolution of this equity cult here in India, that's very, very positive reading. But in the near term, this Trump tariff is clearly, you know, is ruined sentiment. As is, we were underperforming. Now, do you think the markets can still continue to hold on even if we don't get a breakthrough on the tariffs? Or do you think in the next couple of months, the market believes that, yes, we'll get some kind of a breakthrough because the GST cut obviously is going to be positive. It's going to help. But I think the single most, the biggest factor right now that can bring back the positive sentiment will have to be some easing on tariffs. Do you agree? Or do you think the markets can climb the wall?
It's not only that. I think we are in a world which is so uncertain that the only thing I can say with certainty is continuity of uncertainty. We really don't know which way the year is going to end. So it's very difficult to predict, Nigel, in next few months where the markets would be. Where a known we know, known unknown we know, but unknown can come from anywhere. You look at last 5 years, the way they have come. What I think that the market wisdom is telling us that in spite of all of these negative news, if markets have held on, it is not only about the liquidity. The market wisdom is telling you that India is a country which is growing at a rate higher than China. Our inflation is lower than Japan. Our current account deficit, fiscal deficit and public debt levels as a percentage of GDP are lower than America. And our foreign exchange reserves are higher than most of the developed markets in the world. And you are seeing from a $2,500 per capita a clear view for the next several years that with ease of living and the ease of doing business over a period of time with entrepreneurship and a conducive policy environment, you are going to see a consistent long-term growth. This is my view. This is, I think, the market wisdom is saying. And this has brought down the volatility of the market also. With kind of erratic news flow we had, market should have been a lot more volatile earlier. He talked about the FPI numbers. Imagine like a couple of $1 billion, what it would have done at a stock level and at a market level. So it is not only about the liquidity, but I think the policy prudence, I think the agile execution, I think it's the effective communication, and I think the way we are navigating the global geopolitics, it's commendable.
Navneet, you said it, and having a problem is one thing, but the kind of monetary support, policy support, as well as now the fiscal policy support, acknowledging the problem and dealing with it is important as well.
So look at last few months, what we have done. We have cut interest rates more than what anybody expected. Now we are going to do GST cut, which nobody was expecting till few days back. And we have done the income tax cut, personal income tax cut. Now, all of this should lead to what I talked about, wedding economy, winter economy, and the festival economy.
So eventually, I mean, they say
in
that...
In the near term, but structurally in the long run. Yeah.
So eventually they say that, the food for any bull market is liquidity and it's decent earnings. I mean, listed companies with decent earnings growth. Now, given all that you mentioned, GST and the monetary stimulus, etc., because when we talk to foreign investors as well, we were speaking to one yesterday. That's their only grouse. They're looking at China very closely. They've started going back to China. Now, God knows if it's short term or long term, because nobody wants to miss out. When a market is up 20%, everybody wonders, oh, did I miss it? So they're looking at China very carefully, but they're saying, India, forget the tariff issue, forget Trump and 50%. Your earnings are very anemic. So do you see something changing here?
I will say one thing. They're all the grouse against China for 2 years.
Yeah,
nobody wanted to go there.
Absolutely.
The markets were really cheap and they have done well. Surprised positively on policy and markets were really cheap. Money has gone there. I know it's up almost like 40% in last 1 year or so.
And it's all local Chinese money again, which has driven the market higher.
Also the foreigner money as well, which has taken the market higher. I think in India, maybe for a variety of reasons, just that, as I said earlier, that when you have so much of local money coming in, somebody has to supply the paper and they have supplied. The domestic ownership has been inching up, the foreign ownership has been coming down. So a larger part of India is owned by Indians, which is what our wish was in 90s and 2000s. Finally, it's good in my lifetime, I'm seeing that.
No, but from, absolutely, so that's on the flows picture, but from the earnings perspective, I wanted to know if your team is convinced about all the estimates out there, because we made a habit of starting at 13-14%, then we come down to 8-9%, then we end lower. But is your team of fund managers now convinced that there is a turnaround in the works?
Of course, I think some of these sectors, particularly like consumption we talked about, we are seeing a positive sentiment. And of course, everybody is now looking for the move on the GST in next few days. But you made a very important point. I think ultimately stock price is nothing but the slave of the earning power of the underlying company. And these valuations can only sustain if you see the earnings growth. If you see higher economic growth and we see the higher earnings growth, after 3 years of 20% CAGR in earnings growth, we have seen maybe a period of consolidation last 5 quarters, maybe another quarter or two. From next year onwards, earnings have to fire. They have to be at least in line with nominal GDP growth, if not more, for the next couple of years. And I think that's what the hope is. The one thing I would say is that in last couple of years, market is paying a lot of premium to free cash flow, to, let's say, becoming asset light, to higher return on capital employed. But looking at the opportunities in the world, I think we need to invest more. My message to corporate India will be, you need to take a little bit of more risk. And investors also. Today, investors, I think are shying away from anything which is like a large...
I think that is happening now. That is happening.
If an acquisition announced, the stock starts falling.
Yeah, it's changing at the margin, which is positive. Look at US. Amazon is going to invest $100 billion this year. You look at like larger companies going to invest in 80, 90, $100 billion. We won't do that. I think we have frugal engineering in India. We'll take advantage of all the investment they will make, like what we did in 90s. We were the best.
In terms of...
I mean, the beneficiary of the investment in fiber and the network and everything.
Navneet, I want to, one business I want to talk about is the asset management business. And HDFC Mutual Fund, of course, was always this behemoth. And I think you built it up in an even larger scale, larger way. Stocks done phenomenally well. I was just, last week or 2 weeks back, I was just joking that there are only 2-3 sectors where you have visibility, a very strong sort of earnings growth, durable earnings growth. And asset management companies were one of them. I just wanted your thoughts. Is it, as a space, do you think it'll... the runway is higher and long as you see it?
The policy environment is supportive. I think the overall macroeconomic backdrop is very supportive for us. The point I made on the country transforming into a nation of investors is very supportive. This is a structural trend. 75 lakh crores of AUM is around $800 billion. This is where United States was in 1988. By the end of 90s, they were close to $4 or $5 trillion. So that has been the trajectory that we have seen in US. In many ways, the trajectory of asset management industry in India in terms of growth potential can be looked at as what has happened in US in 80s, 90s, 2000s. And these are like very early days. It's just that we have got 55 million investors, so a long, long way to go.
And you got newer instruments also being introduced, right? I mean,
absolutely, yeah.
I mean,
so it's been, and over the next couple of weeks, we'll be starting the whole new series with you in terms of how do we take the mutual fund Sahiya message to the masses, and how do we convert the awareness into the action. The why we still have only 55 million investors, that number can multiply. Why the average ticket size of SIP is less than 3,000 rupees, that number can multiply. So still long way to go.
And just, to ask in terms of size and scale and opportunity, you've laid it out. We have now, I think, over 50 asset management companies in the country, right? And more keep filing, more keep coming in. How will that impact the growth and the competitive dynamics, the spends on whether it's distribution, etc.? And what do you expect on that trend? More and more AMCs coming up.
25 years back, when industry was less than 1 lakh crore, there were 30 players.
Okay. So then
it hasn't really increased that much. It is also maybe, I would say, confirmation of our positive view on the industry, that a lot of people think this industry has a huge runway for growth. So that's positive. We welcome everyone. But the second point you asked was on...
what that will do in terms of just operating costs, the hunt for talent, distribution expenses, because I'm sure it does get competitive.
I think many things. The asset managers who have made it big, what they've done right is, I think, delivering a great experience to the investors in terms of investor performance. I think they have investment management, risk management, and product management capability, which is world class, and at the same time, it is backed by the franchise, governance, and the distribution network. This is what we have built painstakingly.
So space for all, absolutely. So Diwali is coming. The bumper GST announcements have been made. Anything else from the government, from the Reserve Bank? Any other Diwali or New Year bonanza?
I think they have been, they have pumped in a lot of liquidity. The CRR cut will also enhance the overall liquidity, particularly in the busy season for the credit growth. I think what everybody is looking at, that RBI has done whatever it can. They've taken the horse to the water now, can't make it drink. I think the supportive environment, what the government is doing in terms of GST, in terms of some of the other measures, and what I think what we are doing on the geopolitical side to kind of like build up newer relationships. Tomorrow, Singapore PM is in India, what we are doing with Japan, China, Russia, many other countries. And some of the FTAs have been signed. And I read the front page today, like Commerce Minister had mentioned that The US-India may not be too far. So,
Navneet, great interaction, and come more often, I must say. Really charge all of us up, and it's
so
needed.
positive now.
The dose is needed once in a while.
don't fight against the might of a billion people.
Whoa.
Billion and a half. Billion and a half. So thank you very much, Navneet. Appreciate you joining us, and lovely interaction as always. I just want to take a quick, look at the market, which is kind of flattened out, absolutely flattened out for now. What do we have? 1,800 stocks are higher, about 700 stocks are lower. It is MobiKwik is up about 6.5% once again. So it's turning out to be a fantastic day so far. But it's not alone. TBO Tech we highlighted. And there's one more name, which is Moil. Moil is up 6%. Nigel, what's happening here? Tell us more.
Well, yeah, Moil is up because they've come out with their operational update. And for the month of August, in fact, it's up by close to 17%, the production number. So the street likes it. But the brokerages, sell side, they're still a little bit skeptical about them going ahead and achieving a big guidance from year on, because this growth has come on a lower base. And year to date, actually, the growth is up only around 9.5% approximately. So they'll have to keep this momentum up to continue with, continue and achieve that guidance that they sent out earlier. But the reading for August is good. It's coming on a lower base. They have cash in their books as well. So for the time being, the street is headed positively. But as we've seen in the past, it'll be interesting to see whether or not it can hold on to those gains of around 6.5%. For the time being, the street likes what they see. Let's focus on the big mover this morning, though. TBO Tech, the acquisition has gone down well with the street. Mangalam, tell us more.
Well, the street likes it. It's the acquisition season right now for some of these companies. We have a Classic Vacations. There's a US-based company that TBO Tech has decided to acquire for about $125 million, roughly converted to 1,100 rupees. And Classic Vacations has a network of luxury travel advisors and suppliers. And if there's one thing that we know about the travel industry right now, is the luxury segment, which is doing extremely well. So if you look at their performance, 2024, because it's a US-based company, they follow the calendar year method. The revenues were close to around $111 million, which is roughly one-time sales that the company has given. And the EBITDA is $11.2 million, which is roughly, again, 10% margins. The only thing we need to watch out for how TBO Tech scales this, because basis TBO Tech's own revenue of 1,737 crores the last year, this deal itself could aid their revenue by 55-56%, but won't be margin dilutive, because last year they did margins of 16% and this company does margins of just about 10%. They also had cash and equivalents of close to 1,285 crores. So basically, they're exhausting nearly their entire cash to go ahead and make this acquisition. So what they do with this big bite that they've taken is a big question.
All right, Mangalam, thank you very much for that. TBO Tech, 13% higher, holding on to gains that had started. We'll take a quick commercial break here. We have the management of Zydus join us on the other side. So stay tuned. That's a conversation you don't want to miss. A recent acquisition, market reacting quite favorably to it. Stay tuned. Okay, welcome back. 15 points lower on the Nifty, and there is a big order. Man Industries, 1,700 crore order for the supply of coated pipe stocks, jumped about 9%. The intraday, I think, will show you what's happening there. Maybe just a few other names, right? We highlighted Moil and TBO Tech and MobiKwik, etc. earlier. Maybe put these up as well. NetWeb is jumping up on very large volume. Stocks up about 4%. There is Jindal Steel, which is up 3% right now. E2E Networks, which Surabhi highlighted in the morning, is up 10%. So it's limit up E2E Networks. There is, what else? Reliance Infra is coming up with a 4% pop, 290 on it. It's got volumes as well as, of course, had a large fall recently. Edelweiss, there was a large block deal. And 3% on Edelweiss, 114 rupees back on the price. Acme Solar is coming up with a 4% gain. Stocks at about 299 as things stand right now. And there is Tejas Networks, a completely bombed out name, Tata Group company, but it's coming up with about a 4-5% odd kind of a gain at this point in time. There's more stuff, but Coromandel, rate gain is again coming back from, again, bombed out kind of levels, right? 10 days back, stock was at about $400. It's at about almost 570 now. So that has seen a very large, move coming through in the last fortnight or so. Of course, rate gain fell from very high levels as growth rates faltered and the guidance was cut massively over the last 3 or 4 quarters. But it's seeing a bit of a pop. I'm not sure if something is changing once again here at the margin. On the downside, Indus Tower is, of course, become the top volume-led loser, something we highlighted in the morning. It started with about a 1.5-2% cut. It's down 5% now. So that's huge volumes, by far the number one volume-traded loser. Phoenix Limited, there was an upgrade yesterday. Stock did well, is down 2.5% right now. Zuari, Seat, Castrol are some of the other names which are coming up with some volume as well, but nothing very large. I think we've got the management of Zydus Wellness now joining us. They've acquired UK-based Comfort Click for about £240 million. We have the CEO, Tarun Arora, now joining us. Tarun, good to have you with us here. We're going to talk about 3 points here. Let's just quickly go across to Tarun. So we'll talk, of course, about the synergies behind the Comfort Click acquisition. We'll talk about the pickup in growth post the first quarter, which was kind of weak. And, of course, revenue scalability in international markets as well. Tarun, good to have you, and thank you for joining us. So the first point, the logic, the synergies behind the Comfort Click acquisition.
My pleasure to join CNBC. I think if you really look at it, our journey on consumer wellness has covered a broad spectrum of spaces, broadly under 2 heads: food and nutrition on one side and personal care on the other side. Food and nutrition has been our largest space and provides a lot more opportunities on expanding wellness space. Specifically, if we focus on nutrition, we acquired last year RightBite, which was basically a max protein sub-brand. Looking at macronutrition, we obviously recognize that there is opportunity to build further on the micronutrition. Therefore, the VMS segment is something we've been fairly keen on building forward. So there have been several thoughts around it. So it's one space that we were looking at. Secondly, as the world evolves and the ways of consumer behaviors are changing, and the digital space has become extremely crucial for us to build on. So that was the other tick mark that happened. And third was complementary geographies. They're largely a Europe online first VMS brand and doing rather well, growing at more than 50% over the last 5 years as a CAGR. So very successful business built on a very basic fundamentals, amazing set of products. So we said this really fits in from all those points that I mentioned. So a great tick mark from our strategy forward, and that's how this happened.
Tarun, no, that's very well explained. We have more questions. Can I request you, Tarun? The line's a little shaky. If you can ask, I think you were in a car, but is it possible for you to just sort of just park on the side of the road? I mean, the reception will be better. We can hear you clearly, but your video is a little patchy. Nigel, go on.
All right. Hi, Tarun. Good morning and good to see you. Ben, could you give us, a little bit of a sense in terms of revenue scalability? Comfort Click has moved up to around $130 million from just around $50 million in 2 years. How do you see the revenue scale up from here? If you could give us, say, a 2-3 year horizon from here. And margins as well, I think it's in mid-teens. Do you see it scaling up even further from here?
So we do believe the growth trajectory is consistent even for going forward. We don't give any specific trajectory, but our own view is that it'll be a high double-digit growth even here on as well. And there is enough and more potential within the European markets. Comfort Click also got into US market, and there are multiple opportunities. If you really look at it, there are many other markets that we could extend Comfort Click to. I'm not just counting India as well. but it could be Middle East, Brazil. I mean, several other markets. So US itself is such a large market. So we look at all those. So our view is that a growth journey will continue and at a high double digits going forward.
But the entity,
from a margin
Tarun,
perspective, I think.
Yeah, Tarun, the entity is growing at 50-60%. $53 million has become $134 million. So double digit is, being very, very modest. Do you think it can continue the kind of momentum that it's been growing at? And also, if you could tell us with regard to margin moving up from here on?
Yes. So I'm saying will remain consistent. Now, numbers are very hard to not commit, but double digits will stay.
I think it's just a bad line. Can we put Mr. Tarun on the phone line? If we can, let's do that. Because the audio, the video quality, and I think now the audio quality is also a little poor. But that's an important conversation. I'll just wait for 2 minutes before, if you're able to do it. What do we have otherwise? I mean, markets down about 25 odd points, and 1,900 stocks are higher, about 700 stocks are lower at this point. So, market breadth is looking positive, and of course, I mean, some of those names we've highlighted continue to do extremely well at this point in time. Indus Tower, I mean, if you can pull that up, a lot of hope, a lot of expectation, and a lot of believers in that name over the last actually 1.5 odd years. But I think, that, and of course, the dividend postponement was the first big blow. The stock took a big hit. Expectations started building in once again that it perhaps is coming. It's delayed, but now it'll start. Investors will see the dividend. But I think now with, of course, what's happening in Africa and the plans, etc., as Rima highlighted, that investors and of course brokers who cover the stock have also taken their price targets down 1 or 2 pegs. Kirloskar Engine Oil is another one which is down about 3.5%, and Zensar is down about 3% or so. I think, guys, we have Tarun back if we have a question. Nigel.
Yeah, all right. Tarun, you're making that point. You said that it's difficult to give a number, but the question was, can Comfort Click continue growing at the similar momentum that you have seen? And you were also giving us a number in terms of margins. Please go ahead.
Yes. So our belief is that they've grown at 57% 5 years.
Yes.
We hope that we can continue. The momentum is there. The numbers will be a function of the market and opportunities, and also how new markets shape up. But the momentum continues, and we do believe there is more opportunity sitting there. So we're working with the team to see how we can. On the margin front, it's quite this marketing is an expensive proposition, but we hope to further look at operating leverage flowing out. So right now we'll hold it at mid-teens, but maybe 6 months or 12 months into the business, we should talk about what are further opportunities. But right now I'll hold it at mid-teens as it is.
Mid-teens. All right. And you think that in the next 5 years, the business can be a $500 million revenue opportunity?
We sincerely
mathematically it appears possible.
Global market is huge. Market is huge. The possibility absolutely exists, and new markets that we are extending are even bigger. So if we get it right, we can get there.
What is the current share you get from international revenue from the international markets? And post this acquisition, where do you see this scaling to?
So currently our international markets account for 3 to 4%. Post this acquisition, it's almost half our current business, so assuming a 1/3. So about 33-35% is where we land up this year at. And then we'll see here on how the things shape up.
Sure. So the goal would be to take it to what? In terms, if you look at a mix.
So I think we've already got our mix very well. Now, whether it lands up at 40-50% or the Indian momentum also picks up is something to see. But right now, this business is growing at a much faster pace than the India business. So the mix may change in favor of the international business over the coming years. But we'll have to wait and watch how it happens.
Okay. Right. Got that. Tarun, thank you very much for joining us, and appreciate you joining us on, of course, the phone line now. But hope to see you here in the studios sometime soon. Good luck with that acquisition. as you execute this one. Survey.
A very quiet market, really. There is little cheer. I mean, the GST meeting starts today, but I think the market's just waiting and watching to see what the final rates really are and then take a view on which way to go. Trent is under some pressure, down about 0.5%, and Infosys is down a little more than 1% at this point in time. But the metal stocks are really fired up. Look at Tata Steel. It's the index winner now, 1.5% up. Hindalco, 1.4% higher as well. Even JSW Steel. So it's really metals all the way, looking good. Okay, for the time being, let's put the spotlight on the automotive space. Tire maker CEAT has completed its acquisition of Michelin Group's Camso. This will increase the company's overall capacity by 15%. Our colleague Parikshit caught up with Arnab Banerjee, MD and CEO of the company, and started off by asking him about the acquisition and what their growth plans were going forward. Take a look.
Off-highway tires had always been at the top of the heap as far as capital allocation goes. And globalization was another interesting trend that we were trying to tap into. And of course, selling more premium tires. So it ticks all the boxes, the Camso, OHT, compact tire and construction, compact construction tires and tracks business. It is premium and it is mostly sold in EU and North America. And it is high margin. So it's going to add about 10% roughly to CEAT's turnover right away. The current plant that we have acquired has capacity utilization of just about 50%. So there is a lot of scope and headroom for further growth from this plant itself. And of course, when we acquire the brand 3 years hence, then a lot of other categories will open up for us. And we have to invest further to tap into those segments as well.
Right. Just to ask you again, how does this increase the overall capacity that CEAT has currently?
This plant is about 250 tons per day. So this is roughly about, you can say, a little less than around 15% capacity is getting added overall to CEAT's current capacity.
Right. I would also like to ask you that in terms of global markets, how does this increase your exports? What is the kind of increase that you are expecting on an annual basis?
So today our international business contribution or saliency to our overall business is about 19%. With the integration of Camso business on an annualized basis, this will go up to 25% straight away.
Okay. Just to also ask you about whether CEAT is considering similar acquisitions in this fiscal. Are you considering more acquisitions in other markets?
Well, this is going to cater to North American and EU markets. As you know, OHT is at the top as far as capital allocation goes, followed by passenger car tires, followed by actually two-wheeler tires, then passenger car tires, and then truck bus radial. So that's the hierarchy. We would be looking out for opportunities, but our first task is to integrate this business well and grow from there. But we will be proactive henceforth to look at opportunities which we can bite.
From your statement, it is clear that you would be investing about $171 million in the Sri Lanka market. How is this funding being generated?
So right now, about $137 million has been transferred to Michelin. Not all of them have gone to Sri Lanka. But broadly, 70-30 is the funding, 70 debt and 30 equity.
Okay. Overall, what would be your demand outlook for the domestic market currently?
In India, the demand outlook, as I have maintained, is fairly robust for truck bus radial, which is roughly at mid-single digits volume-wise. The passenger segment, four-wheeler segment is somewhat subdued, very low single-digit growth. And two-wheelers, especially scooters, also motorcycle tires are doing very well, very close to double-digit or high single-digit growth, supported by very strong rebound in the rural markets.
The proposed GST changes, how do you stand to benefit from this?
Well, we don't know for a fact what these changes will be, but if it comes down from 28% to 18%, I think that's a very, very good input for long-term growth of the entire industry in the country. And we are looking forward to it happening whenever the changes take place. There'll be short-term adjustments in the market because the price to the consumer will go down to that extent. But I think the long-term view is very, very strong.
Right. 50% tariffs by the United States and ongoing trade tensions with the US. How is that impacting CEAT, and what kind of recalibration in strategy have you had to undertake?
So our total exposure to the US market is less than 3% or just about 3%. Out of that, 25% is actually the auto component duty, which is applicable on truck bus radial and passenger car radial, and 50% reciprocal duty is applicable on off-highway tire. So off-highway tire is about 1.25% of our overall business, not much. So that will come to a standstill if it continues at 50%. But for the rest, I think we are not very uncompetitive with the rest of the world. We are actually at par with the rest of the world because it's a category level duty of 25%. So we will continue to explore growth in passenger radial and truck bus radial in the US market. Sri Lanka, from where Camso will operate, has a duty of 20%, which is again at par and very competitive with other similar markets like Vietnam, Indonesia, etc. So we'll continue exploring the US market for further growth for OHT from Sri Lanka.
Right. That is an important point. You will use other markets to manufacture and export to Sri Lanka to US as well. And overall, if you were to be asked about growth in FY26 in light of geopolitical uncertainties and the demand sentiment in India, how would you peg that, and what would be your outlook at this stage?
So Q1, we have grown by double digits, and we expect to continue this momentum through the year and end the year with a double-digit growth. There'll be some headwinds when the GST changes happen as we expect. Maybe a couple of months, the trade will downstock and adjust to the new regime. But again, the growth will be stronger post the drop in GST rate if it were to happen. So I'm overall quite bullish that we should be able to deliver double-digit growth through the year.
A flattish start to trade. The Nifty is holding more or less flattish. The good news today, though, is the breadth of the market. You have close to 2,000 stocks that are advancing and just 600 stocks that are declining. So that's what will be making your portfolio feel good. Vijay Rajani, the senior technical and derivative analyst at HDFC Securities, joins us on the show. Hi, Vinay. Good morning. Good to see you in. What's your view on the Nifty? Do you think we are closer to the lower end of the range and you look to buy the Nifty? And also fill us in with a couple of trading picks.
Yeah, good morning and thanks for having me on the show. So definitely the broader markets have been doing good despite the sell-off yesterday we saw from the higher level. Nifty fell by more than 200 points, but broader market did not fall. And in fact, some of the sectors and stocks keeps on moving higher. So breadth has been positive. That gives us the sign that there should be some positive bias, and at the lower level we should find support and bounce back. So overall, we are advising that unless we see a Nifty closing sustaining below 24,400, trade should be on the higher side only, and we can expect some sector and stocks to continue to do well. So 24,400 is a trigger level which should be utilized as a stop loss in the trailing long position. And yes, there is a resistance around 50 days EMA which is placed around 24,800, above which the momentum will come back to the in the favor of bulls. So right now we can say that Nifty is oscillating between 24,800 to 24,400, and above and beyond this level we can expect some momentum to come back. Till then we can trade stock specific and sector specific. But yes, overall bullish bias is there. Some sectors are performing well. So selectively we can do a bullish trades in the market.
What about stock picks?
Yeah, so I see some strength in the railway stocks and some defense stocks. So BEML is the stock which is having exposure in both segments, and PSU stocks has also started doing well. So BEML can be traded long around 4,100. Stop loss I'm suggesting around 4,000 for the short term. 4,280 should be the target in BEML in next couple of sessions. The second pick I would take is the PSU bank. So Indian Overseas Bank is looking quite strong. It has reversed from the lower level and now showing strength with the volume. So around 39.85, one can go long in IOB. I would suggest a stop loss at 38.5. On the upside, I'm expecting a target of 42.80.
Okay, Vinay, we'll leave it there. Thank you very much for joining us. Good speaking with you. Appreciate it. We'll take a quick commercial break here. We're going to come back. More markets on the other side. Stay tuned.
Welcome back. Well, one stock that we highlighted yesterday in our morning chat was MobiWik. You know, the stock is a beaten down stock. Pull up a one-year chart of the stock. It's far cry away from the highs. The only thing was there was a pending block trade from Adya, which got cleared out. And post that, you know, just take a look at the stock still after the kind of rally that we have seen of around 22% just in the last two trading sessions. It's still up only around 5%. So it's a far cry away from around, you know, that 640 rupee odd mark that we saw earlier. But it's bouncing back post this, post this clean out trade, and also that commentary that the management has given that things will start looking up from FY28 onwards. And if you look at it on EV upon sales, well, it trades at around 1 times or thereabouts. So I guess that's another factor that's playing in that favor. Let's take a break from the equity markets, focus on the commodity markets. Manisha Gupta joins us as always to tell her what is she picking up. Manisha.
Well, I'm looking at precious metals really because can't take your eyes off that. Today's the third straight day that we are looking at all-time highs continuing in case of gold, and the Indian markets have seen all-time highs yet again for silver. So until time, we're looking at $3,547 an ounce as an all-time high in the international markets for gold. And with that, it's 35% up in 2025 till time. There is a support to flight to safety, and that is what we are seeing in many of these precious metals, the way the money seems to be churning in here. And then apart from that, there's broader political and economic risk, which seems to be supporting markets. It also has to do with the tariff concerns. Remember, 50% on India. There is some premium that we've seen building up onto this as well. The rupee depreciation has led to Indian markets see higher prices than what we are seeing anywhere else in the world. The expectations of US monetary easing really seems to be doing the trick. As of now, there is nearly 90% probability of a 25 basis point rate cut for the month of September. And then you have banks and brokerages talking about 2, maybe 3 rate cuts. And that is what seems to be fueling the gold rise there. The markets also have seen diversification away from the US dollar into gold. When you look at all of that central bank buying in sense of forex reserves, gold clearly tops that list. The support also seems to be coming in from the dollar index, which is trading at a 5-week lows. Most of these commodities are dollar denominated, and the decline in dollar and treasury yields also has been quite supportive there. So it's not just about gold really, because silver prices in the international markets also are trading near 14-year highs. So if gold has gained up by 35%, you have silver up by nearly 41% in this year until time. And then it's not just about silver as well. Most of the other PGMs are doing quite well. If you look at platinum prices, those are trading at an 11-year highs. Pardon me, and platinum prices have actually outperformed overall precious metal prices. We have seen gains of 57% onto that one on a YTD basis. Well, where is gold headed from here is a big question that the street seems to be working with right now. We have a report from Standard Chartered overnight, which is anticipating that the prices could be headed to $3,700 an ounce by the end of this year. You have 36 and 3,700 kind of levels also coming in from Citi and Goldman Sachs, and then it is about 3650, 3675 is what JP Morgan and Bank of America seem to be putting out in sense of forecast. So even as we're trading at 3550, it is about higher highs in the fourth quarter of this year that the banks seem to be working with.
All right, Manisha, thank you very much for that. We're going to focus on Indus Tower one bit more. Stocks down about 5%, large volumes as well. Winnie is here to put the spotlight back on this one. Winnie, over to you.
Hi, good morning. So Indus Towers today, what is the news flow that came in? The board has approved the company's foray into African markets. They'll be starting with Nigeria, Uganda, as well as Zambia. Now, this is not a bad news flow, but why is the stock falling today? Because investors are concerned about the dividend payout. Now, this could maybe delay the dividend payout that would come in for the company. Now, what is CLSA saying? They have high conviction, outperform rating for the stock, but they've cut the target price to 520 rupees from previous 595 rupees. They said that this was on expected lines. They expected the management to actually focus in terms of improving Indus's capital structure by paying high dividends. Now, that will happen, but it will be at a delayed pace, and that is the concern that investors are highlighting. Even Citi is saying that, right now, maintaining the rating, maintaining the target price at 460 rupees, but the delay in payouts, Vodafone Idea, sustainability, and Bharti's slowing rollout appears to be a bit overdone, a bit of a concern that's coming in over there. They've given a bear case scenario as well, where they're valuing it at around 300 rupees. But as of now, value proposition for Citi is not bad. They're maintaining the current valuation, seem favorable versus peers. The concern that they're highlighting, that not a concern, a positive that could come in for Indus Towers would be if there's a government relief that comes in for Vodafone Idea, then that would lead to a positive benefit for Indus Towers, but that is what everyone's keeping an eye out on. As of now, investors concerned about dividend payouts.
All right, the stock's selling off a little bit. Vinny, thank you very much for that. We'll take a break here. Indianomics coming up on the other side. And Lata, in a very special conversation with Dr. Saurabh Garg, the Secretary at the Ministry of Statistics and Program Implementation, on the first quarter GDP numbers. Stay tuned.